Shall we make a start?
Yes, let's get started. Where is the page? Okay, we have 78 people so far, which is a good start. Hopefully the rest will be able to join shortly. Okay, everyone, welcome to this webinar, and thank you for joining. Thank you for taking the time to join. My name is Iman, your host for today, and I have my boss, James, and I have Mary with me on the screen. So this webinar is mostly for educational purposes. So we are here to educate you on a few important instances that relate to growing your wealth, which is not a quick get rich quick scheme. And James will be able to get in depth in regards to this point later on in this webinar. But let's get started with some introductions. Let's introduce ourselves, right? Let's make it a bit fun from the beginning. Okay, so I am going to start with my amazing and wonderful boss. So the CEO and founder of Prinden, James Prince. Who I'm honored to work with. It's such an honor to be here with him for the past 2 months since I joined. He has been advising clients and families for the past 12 years. So he spent 12 years in the industry, mostly focused in the UAE. And he has helped thousands of individuals build their wealth, improve their mindsets, and identify their best skills and passions to help them grow. So the key word here is growth throughout all of this webinar. So James has been able to help build people or build their wealth, help people build their wealth from zero to millions of dollars throughout these 12 years of him operating in the industry. And by having properties, by setting up businesses, by other means of investments, which allow these clients to have passive income. And so he's here with us today to share how he does it. So I am going to give you the word, James.
Thank you very much. And thank you for the kind words, Iman. So I'll actually also introduce Iman and also Mary. So firstly, Mary, she's my one of my longest standing team members. She's been with me, or put up with me for 9 years. So she's here to support me with and the business with the back office side of the advisory practice. And Iman joined us 2 months ago, and she has her bachelor's in economics and she has the master's in finance and corporate law. As most of you know, Iman, she has over 500,000 followers on TikTok, and what I've seen in such a short period of time with Iman is that she's all about helping and giving, educating, supporting people. And like myself, we try and do things in a simple way. We try and take something complex and make it simple. And I think that's attributed to her success in a short period of time. So big welcome to Iman and Mary for putting this together. And I hope that you're going to find some benefit and get some good use out of this, and at least have some takeaways of things to go away and work on to help improve your future finances and build your wealth. So, excuse me, Iman, do you want to go on to the first?
I am going to share my screen. Give me 1 second.
Often with finance, it's a lot of visuals and descriptive. So what we decided to do was, rather than me just talk and share stories or explain about how to build your wealth, is go through a visual presentation, which we can share with you after and explain more. So obviously the key topic here is how to grow your wealth to $1 million, and $1 million for most people, depending on what age you're at, has always been kind of a target for people to reach. You know, there's always if you're a millionaire or you have $1 million, you've made it, or you have significant wealth. With inflation, and especially as the rate of inflation that it is now, $1 million isn't what it used to be, but it's still a significant benchmark to reach of your financial wealth, and certainly you can have a good standard of life if you reach $1 million. Actually, reaching the $1 million is the hardest thing. It's easier to go from 2 to 10 than it is to go from 0 to 1. But today we're just going to focus on how to grow your wealth to $1 million. Can I, Iman? Yeah, okay. Yeah. If you go to the next, we've done the intros. Okay, so depending on where you are in the world, we're based in Abu Dhabi, and there's a few different licenses that you can have in the UAE. You can have a central bank license, you can have an ADGM license, DIFC license. We actually have an ADGM which is regulated by the FSRA, which is, in my opinion, is the highest regulation that we can actually have in the GCC region. The UK regulation is one of the most long-standing regulatory bodies that's seen a lot of ups and downs in markets and advice, and so we try to find the most regulated entity to make sure that it offers us that credibility, that when we're dealing with clients, they know that we're dealing and advising from as high a regulation as we can possibly have. So that was just to show you from a credibility point of view and where we come from. It's important to us that we are regulated. Man, if you go to the next one. Yeah, so this is what I mentioned earlier. So, you know, in my career, I've been 12 years in Abu Dhabi, but I was previously advising people in the UK. I had a background in law and went into properties, investments and businesses in the UK, then came out to Abu Dhabi in 2010. And I was advising individuals and families on how to grow their wealth. And as I explain it, I find it easier, and clients tell me with the methods that we work with, that the hardest bit is growing from 0 to $1 million, or even maybe some people are in debt and we get them out of debt into positive and then growing to $1 million. But it then becomes easier. Once you've got to that first $1 million, it becomes a lot easier. And everything that we advise not because we've read it in a book, we advise because we've done it ourselves. So we are practicing what we preach. You know, I'm now on my 7th or 8th business. I've failed at times. I've gone into investments and failed. I've gone into different structures and properties and failed. And the failing is not failing. The failing is when you learn and develop. And the books don't teach you that. The books just tell you the right way to do things. And I think any coach or mentor which is advising from the point of, look, I've been here, I've failed, I've learned, I've taken 2 steps forward and then 1 step back and then 2 steps forward again, I think is at a strong position. So when we advise, we're doing it from a place of experience as well as just from a technical point of view. So this is something that I don't think you will read in books, or you will ever see financial advisors talking about. So part of the reason for developing, for gaining large amounts of wealth and money and investments over a sustainable period of time, it is broken down into, I think, 4 areas. The biggest determining factor is how hungry you are to grow. And that's something that neither myself or Iman or anybody else can ever teach you. You can't teach someone to have that inner hunger, that inner why. That has to be born into you, either because you're somebody who wants to succeed and achieve, maybe because of your upbringing, that you want to have and create a different future and lifestyle for you and for your family that maybe you didn't have. And it can be a variety of different reasons, but that inner why is something that we can nurture and we can protect and build upon, but it's not something that we can instill in you. But all of the factors, the mindset, having the people around you, and the financial capabilities is what I can teach you and coach you on. Imagine if this is a car and you're trying to go at full speed. This is where the hunger is the engine, the body work is the mindset, the wheels and the tires is the people around you, and the steering wheel is the financial capabilities. Now, most financial advisors or anybody that's trying to get you to invest or buy property, they're just going to be focusing on the 10%, which often is about them and not you. They want to sell you something, they want you to buy something because it benefits them. They don't really care about all of the other 90% contributing factors, which actually is the majority of what is going to make the difference of your financial success or failure. The hunger we've touched on. Mindset is, it then becomes everything else other than hunger. The glass is either half empty or half full, and we all have situations that come into our life, directly or indirectly, and it affects us. It can hurt us, it can stop us from doing something, it can even set us back in our progressions in life. But you can use that to be the wind behind your sail. You can use that to be the fire that gets you going, to progress you on at faster levels. But the people where their glass is half empty will be saying, oh, this is not my opportunity. I tried, but it didn't work. It isn't my time. My opportunity will come along in the future. I just need to sit here and wait. Whereas the people that are the go-getters, the ones that say, okay, it wasn't really what I designed and it was a setback, and maybe it's cost me money, or I've lost a friendship, or something has happened, I've lost time. But you can use that and that be, like I said, the wind behind your sail. You can use that, and as they say, things don't happen to us, they happen for us. And if you take the positive out of everything, and as bad as it seems, and we're all human at the end of the day, really bad circumstances and events can knock us back and can affect us emotionally, can make us stressed, can make us worried. But after a period of time, we need to reset the clock and say, okay, what can I take from this? What are the benefits? How can I allow this to propel me on to bigger things? And I'll share with you books and podcasts, and that this is a big part of the coaching that we do with our clients, is around the mindset of investing in going into property and collaborating with people, how to set goals, how to build, how to think, how to feel, how to protect your confidence. So there is a mindset is a huge part of it. The people around you is also a huge contributing factor. A lot of people will say that you become the average of the 5 closest people around you. That may be true, may not be true. I don't think there's an exact science to it. But if you share with people your passion, your dreams, your values, where you want to be in the future, and you have alongside you people that want to support you in that journey, and they also share the same values and passions and capabilities and a desire for growth, you have so much more stronger chance of achieving where you want to get to. We can't do it on our own. It's difficult sometimes. It might mean that as you grow and you develop, you might need to leave behind some friends and people that are holding you back. That happens, and it's difficult, and I've been there before. But for you to develop your financial freedoms, your capabilities, your skill set, you need to become a different person. As the famous quote from Einstein, that insanity is when you keep doing the same thing expecting a different result. You have to think differently. You have to become a different person. You can't expect to be yourself with the same friends, the same habits, the same thing that you do from 7 in the morning until 5 at night and just have a different bank balance or a different level of income. That's not possible unless you're one of the few unfortunate people, and I say unfortunate for a reason, the few unfortunate people that get rich overnight and become an overnight success from crypto or a stock or something, because that wealth isn't sustainable. There's another famous saying from Ray Dalio that the money that is, if all of the money in the world right now was equally divided up and was placed equally in everybody's pocket, it would only be a matter of time before the money ends up in the same pockets than it's in right now. And I think that is so true. So we all need to up our game if we want to increase our finances, our income. We have to develop into a different person. So that's the 20%, and the 10% is what we're going to go through partly today, which is, you know, what to do when you have money and how to invest and the things to think about. But I want to emphasize that when I look at my development as an individual and I look at the people around me that I've coached, the ones that have had the largest amount of success over the last 15, 20 years I've been coaching people, are the ones which have changed their mindset, they've changed the people around them, they've changed their habits. And that is because their hunger, their why was something in strong that meant that they wanted it to be different. So, man, if you go on to the next. Okay, so this is where I'm going to show you today on how to develop and to go from 0 to 1 million. So if you go to the next slide. Okay. So what I created is 4 levels of clients. Now, the reason being is that finances can be very confusing. It can be very complicated. And there's lots of advice. You can go onto Instagram and the internet and people will be telling you, you know, invest in this stock and invest in this. And there's a lot of noise around. But the key to success, if you're imagining if we are building let's say we're building the Burj Khalifa, you can't just start building the Burj Khalifa from the ground upwards immediately. You've got to go and build the foundation, and you've got to make sure the foundation is strong enough to take the load of 850 meters or however high it is. So when we start with the 4 levels, and the first level being Explorer, I go through certain habits and certain investment strategies that I advise clients to take out before, and to think about and to tick off before they move on to the next level. Now, this doesn't always have to be a hard, fast rule and everybody has to do this, but it's a strong guideline because it's something that I believe in. If just go back 1 second, Iman, if you can. I created 4 levels. This is just up to $1 million. So you've got Explorer, which is the $0 to $50,000. Then there's the Go-Getter, which is $50,000 to $250,000. Then Rising Star is $250,000 to $1 million. And then we've got $1 million plus, which is what we call Limitless. Now, there is also ways. I don't know if any of you have played a Snakes and Ladders game. Snakes and Ladders game is 12, 16 boxes, but you kind of go along. It's a board game where you go along and you try to get to the top of the game. But there's ways of kind of not cheating, but accelerating your way up. And part of this can be your personal development, your network around you, listening to the right podcasts, listening to the right books, and developing your skill set and your capabilities. So this is something that both Iman and myself are passionate about, and this your skill set and your capabilities. I'm not sure if you can see me on the camera here, but your skill set and your finances are always inextricably linked. If for some people their finances, and we talked about the get rich quick schemes and coming into money quickly overnight, If your bank balance goes up really, really quickly and your skill set and your mindset is still here, it'll only be a matter of time before that comes back down again. If you are developing your habits, your capabilities, your mindset at a fast rate, your bank balance will catch up with it. And I've seen that with myself. I've seen it with hundreds of clients. So this is why we've put this together, to keep it simple, but also to guide you. But it isn't rigid, and there's ways of moving up quickly. So we'll start with the things to be thinking about with Explorer. The first thing, and this is really the engine that was talking about, your why, the goal setting. And this is when we sit down with our clients, we try to understand what's important to them, why they're meeting with us, what are their goals. Is it to get out, to remove any debt? Is it they want to buy property? Is it they want to become a millionaire? Is it that they want financial freedom? Is it that they want to set up their own business? Is it that they're in a job that they hate, and they want to open up a coffee shop or a florist, or they want to invent something? Or maybe it's for philanthropy or charity work. It could be that they want to provide for children or send money back home to family. So there's many reasons why people would meet with us, because they want to improve. So we sit down, we spend a lot of time getting to know our clients to understand what's important to them, and your goal becomes our goal. If we're going to succeed as advisors, as coaches, we can only do that if we help you achieve your goals. So we spend a lot of time focusing on what's important to you to try and make it happen in the best possible way. Once we've done that, we look at what we call cash confidence. So before we allow anybody to invest, it's always important to make sure that they have what we call a rainy day pot or a safety net. And cash confidence is because when you have cash in the bank, it gives us confidence knowing that, okay, if work turn around and say we can't pay you this month, or we have a family emergency, or some bill is unexpected, or something with health, we know that we have a certain amount of money available in our bank that's not invested, that is immediately available with a debit card, that we can cash a check and pay for it. So this typically, as a benchmark, we would use 3 months of salary. As a minimum, I would say 2 months, with a maximum. Some clients of mine like to have 8 to 12 months of salary. I think beyond 12, I think that's far too much. But as a rule of thumb, I think, between 2, 3, 4 months is a good benchmark to have, and make sure that that's cash that is never invested and we don't touch. Once we've done the goal setting, and once we've got the cash and the safety net, we then look at stage 1 investing. So the reason why we call it stage 1 is because this is about building habits. It's about something which is automatic, that sets the foundation in investing. Often when we are trying to build success, it's about repetition. It's not about trying to time it or get it right. If you look at somebody who is a gym instructor and you are trying to get in good shape, you can go onto the internet and try and do all of this yourself. But there might be some mornings when you don't feel like it, you feel a little bit unwell, and you say, okay, I'll leave it until tomorrow. And then tomorrow comes and you say, I'll leave it until next week. And then your results then get affected because you've not had that habitual repetitiveness. And that is one of the most important things to start building your financial success, is the consistency. It's the repetitiveness about it, and building that automatic habit. So what we look at is how can we build something which is automatic, and start investing into medium to low risk investments. And it's at this stage, it's not really about the investing and what the investment is. It's about the consistency and the habit of building. So once we've done that, and we tie that into your individual goal. So it's not about, it's not like you have to invest a certain amount of money for a certain period of time. We design it specifically to you and your individual goal. The life insurance, this isn't for everybody. Obviously, there's different religious and cultural views on this. It's just if any individual was to take out life insurance or think about protecting their family wealth, and we have Islamic life insurances as well that we can use, this would be the stage to have that conversation between 0 to 50K when you're looking at setting the foundation. But by no means it's something that we definitely don't say it's something you have to do, but it's a conversation that we would have. This typically, depending on your level of income and the books that you're reading, which we'll talk about later, and podcasts, and how much hunger that you have, this typical explorer process might be 6 months, it could be 2 years, it could be 5 years. It just depends on where you are at with your level of income, your progression. Are you starting at a point of strength? Are you already in debt and you're trying to get out of debt? So there's no race with this. This is, a marathon, as they say, and it's about developing and evolving over time. But once you've completed the explorer level, we'll then go on to what we call go-getter, which Amanda and me have not really, we're not really satisfied with the name on this. It's been there for a while, but it's whenever we talk about the name go-getter. So if anyone has any suggestions, please put them in the chat, because it's not really something that we like. But the point is, it's about a progression. So this stage really, you've kind of gone through the fundamental side of things. You say that you've set the foundations, and this then now is looking at expanding. So whenever we are growing wealth, we also need to grow vertically and grow horizontally. You never want to grow vertically, because if something happens, it can be knocked over and it can be affected and you could end up losing it. So the idea is to grow vertically and horizontally at the same time. This is between, when you're getting to 50K and 250K, you could start looking at the different levels of planning. So if you have children and you want to start thinking about maybe university fees, which goes up, at a crazy amount every single year. So clients keep informing me about education in the US and different parts of the world. You can start planning for this. It's better to get ahead of the curve. Thank you, Myth. I quite like that one, expander. I think that's a nice one. So once it's always important to start with your own goal first, and then once you've kind of got your own goal set up, then you can start looking at the kids' education. Obviously, if you have children and that is an important goal for you, that's something that we can explore in this stage. It may not be important. Some of my clients say, James, I had to pay for my own university. I had to have my own debt. It was important to me. That's also fine. This is an individual thing, but this would be a section that we would look at. Wills and guardianship is also important as you're building and developing your asset base, and you get to 50K to 250K. You're starting to think about properties and bank accounts. Maybe some things are international. Maybe you have children and you want to be thinking about guardianship. Okay, what happens if something happens to me and my husband or wife? Who's going to look after them? This is where we would explore and advise you on this and how to structure it correctly. So stage 2 investing, this is more what you would call a platform type of investing, where it's not about habits and automatic. This is the next level, that once you have the fundamental, something is coming out monthly from your bank account and going into investment, whether or not it's $100 a month or $1,000 a month or 5,000, whatever the figure is that you've set up automatically. Stage 2, you'll be using maybe a bonus, maybe some excess money that has been built up. And this is where we can start to look at different type of investments. It will be investments in the markets. So you might have heard of things like ETFs and stocks, equities, funds. So this is the typical type of investing that we can do with this. And it's quite nice because stage 1 is a very basic way of investing. You don't really need to be thinking about what type of investments are they and what is the jargon and what does this mean. It's automatic. Stage 2, you can get a little bit more involved in picking it. You can have a look at the application. The stocks will be updated daily. If you wanted to get involved in this a little bit more in stage 2, you can do it. You can buy Facebook, Amazon, Netflix, Google, these type of things, or you can dial it down and also have a little bit more simple. But it's designed to be more flexible and ad hoc, so that you are putting, bonuses and extra cash that you have in. So once you've done that, exploring businesses and properties for investment. So not everybody has a goal or a desire to own their own business. Not everybody has a goal or desire to have their own investment properties, but this is definitely something that we will be exploring with you, talking about, showing you how to do it, getting you to be thinking about the right type of things, connecting you to the right podcasts and books to develop your skill set and mindset on getting yourself ready. Because once you get to kind of 150, 250K, you've got enough to be going into a business or putting a down payment on a property, 10, 20%, and going into it. So we'll definitely be mentoring you, advising you on how to prepare and get ready for that. So once you get to 250K, we then start to look at what we call rising star. So this is 250K to $1 million. So for the people that want to be buying property and they like the idea of what we call financial freedom, property is one of the most straightforward ways of having an income. Financial freedom, by the way, my definition is when your income, your passive income from your investments, is equal or more to that of your salary. So let's say, for example, that your salary is 100 a month in whatever currency. If you have 100 coming in each month from passive investments, so you're earning it whilst you're sleeping and you don't have to work on it, it's coming in automatically, then you've reached a point of financial freedom. And property is one of the easiest ways to do that. And you can do it locally in the country that you're in. You can do it internationally. We advise clients on how to do it in the UAE, how to do it in the UK, Canada, Europe. There's different rules in different countries. There's different tax laws. There's different regulations that you need to be aware of. So we advise on that. If you're trying to build multiple properties, I can advise you on how to structure it in a commercial and in a corporate way. But at this stage, you should be looking at, if you want to go into property, you should be looking at you buying your first investment property. You can also look at alternative investments. So this might be for people that want to go into NFTs, they want to go into arts, they want to go into crypto, they want to go into private equity, which I have below. They want to go into investing into other people's business, which can be a type of private equity. For them of you that aren't aware, private equity is a company which isn't listed on an exchange. So Facebook, for example, would be a public equity. It's a publicly traded, listed company that anybody can buy shares online. A private company is one which is not open to the public, and you might get the opportunity to invest in it through a friend and become a shareholder, or you might get an opportunity to invest in it through, let's say, myself or another advisor or somebody at the bank, which can be exciting because you can learn a lot more about businesses by investing into a private company than you will investing into, say, Facebook. So for me and Iman, when we're trying to educate and grow, it's always from a place of learning as well. If we do our job properly, the point that we exit this planet, it will be that we have helped you to raise your level of income, but also raised your level of understanding to the point where we're no longer needed. And we've been able to pass our knowledge on to you. And then I think we've done our job properly. It's not just about us trying to make people rich. So private equity, alternative investments is important. And then you have collaboration. Collaboration is also a great opportunity for you to learn about yourself. One thing that we do at Prinden internally, and also I encourage my clients who have businesses and who want to develop, is to do a lot of profiling and personality tests. The more you understand about your unique skill sets, your passions and things that are important to you, the quicker that you can grow. And also of them people around you as well. So you're always trying to collaborate. If your weaknesses is somebody else's strength, you can grow 100 times quicker than if you're just trying to develop your own weaknesses and trying to become the person that does it all. If you work on your weaknesses, they just become strong weaknesses. So that the idea is just focus on your strengths, find out what is important to you, what you're passionate about, what your skill sets are, and also identify what your weaknesses are, things that frustrate you, things that you push to one side and say, I'll do that later. You want to focus on the things that give you energy and you're passionate about. And that is the quickest way for you to develop your income streams, to develop your skill set and capabilities. So collaboration is a big part of that. So moving on to the limitless level. So this is when you've reached $1 million, you've put the fundamentals in place, you've already have the safety net, stage 1, stage 2, you've gone into property. And then this is when you're just doing more of the previous level. So if you're looking at property, you're actually going to now be building a property portfolio. It might be an international portfolio. It might be just that you're doing more of the same in the country. So let's say if it's in Abu Dhabi, you might go from 1 to 2 and 2 to 5 and 5 to 10. You might be looking at commercial property as opposed to residential property. It might be that you say, I don't want all of my wealth in one currency. I want to build it into euros or dollars or pounds. So that's something that you can explore. Owning your own business is something that I'm a big advocate of. If we help you invest your money, you will develop a little bit, maybe 5-10%. If you buy property, you might develop another 5-10%. If you go into a business, you will develop 80-90% as an individual, because the things that you need to be thinking about when you have your own business, you need to be thinking about marketing, you need to be thinking about profit and loss, you need to be a good recruiter, you need to be a good motivator, you need to learn how to sell, you need to learn how to develop, you've got to pick other people up when they're down. So you have to wear so many hats, and you need to understand more about yourself than any of the other aspects that we talk about. And if you look at the Prinden logo, which is kind of 3 circles, it's actually a pound sign because that comes from my British roots, excuse me. But also there's 3 circles because we believe that to have pure financial success, you need to have investments, properties, and businesses. So this is something that I would encourage. And I've had many clients that I've worked with over the last, decade that have said, James, I don't want to go into business. It's not something, I'm not a business person. But as I have spent time with them and understanding them and learning about their strengths and things that they're passionate about, I've had many clients that have then gone into a business and not realizing that actually they can be extremely successful at it. So it's about, developing and nurturing. Some people don't want to have their own business. They don't want to be a lone wolf that is on their own. Some people like to invest with others. So it might be that you have a family member or a friend that has a great idea in a business and they need some support, or maybe they need some money. It's a good opportunity to invest with them where you can still learn and develop and accelerate your wealth. So it doesn't have to be, okay, I have to think of a new idea and I have to come up with a patent and a product. Sometimes it can just be a simple service. So if you're looking at expanding your portfolio, you're looking at going into businesses, the thing then is to start to widen your mindset and start to think internationally. When I made the comment at the start that it's actually easier to go from to 10x your business, to go from 1 million to 10 than it is to grow from 0 to 1 million. That is so true. And I can't really use an example of why that is, other than your mind and the people around you, and the fact that you have so much more confidence and such a wider network that deals and opportunities start to come to you. It's unlikely that when you're starting to build your development and your capabilities and your finances, that deals will come to you. Actually, this isn't true. They will come to you, but you won't be able to identify them. It's like, you're sitting there waiting for a bus and they just keep coming by because you don't know what the bus looks like that you need to get on. But once you get to that level of reaching 1 million and above, and you've gone through the different levels, you will know what it looks like. You'll know what success looks like. You'll know what successful people look like and what opportunities look like. So you jump on them immediately. And that's when you can level up far quicker than what you can if you're going from 0 to 1 million. And this is the whole point about collaboration, thinking internationally, making an impact and helping people is also one of the quickest ways to grow. If you help enough people get what they want, you will get exactly what you want. And it's far easier to give and help people than it is to take. And life gives to the giver and takes from the taker. So if you are trying to offer a service or do something good, or like with a man with her TikToks, and she's trying to offer advice and support, and she's doing it from a place of giving, look at how quickly she's grown her following as a result of that, rather than saying, okay, come and buy this product for me because I want to earn a lot of money. If you will become so much more attractive as a person if you are thinking of ways to help people. Over the thousands of clients that I've helped over the last 10, 15 years, I've seen every spectrum from givers to takers. The ones that the clients that I want to spend the most time helping with are the ones which are the givers. I don't want to spend time with people that don't appreciate, their friends or their family, or the fact that they wake up in the morning and they can breathe and they have good health. There's certain attractiveness that people have when they are going out and they're wanting to help people. They're wanting to find ways to support them and lift them up, and trying to adopt this as a character of your personality will also level you up. Succession planning is also a big part of it, that once you get to $1 million and above, and your mindset starts to change into, especially if you have a family, you start to change into the next generation. How can I pass on? If you've learned and developed, how can I pass on the baton of wealth and knowledge to other people? So that's another part once you have built up, and that becomes a huge part once you get to 10 million, 50 million, 100 million above. Succession planning and giving back and philanthropy work becomes a big part of that. Iman, if you go to, so these are 3 good books that I would recommend. I mean, there's many books that Iman and myself can share with you, but these are 3 very good ones that talks about and reinforces the things I'm saying today. So the Psychology of Money is a great book to understand about investing, not trying to get rich overnight, and building a long-term view on the mindset, investing, how to cope with down times in the market, which, right now we are at a very, very down period with what's going on. There are a lot of moving parts in the economy right now. And so this is quite interesting time to be reading a book like that. The second one, Be Your Future Self Now. This will be really good in helping you try and become that different person that is needed. You know how we talked about you need to become a different person to develop. You can't be the same person and expect a different result. This is a great book by Dr. Benjamin Hardy that will talk about goals and mindset and how to develop into that future person. The third one is my coach, by Dan Sullivan. He is an amazing entrepreneurial coach, and he has a service-based business and is all about finding out who do you want to be a hero to. And this talks about the giving. If you can go into every single friendship or meeting, or you go into your workplace, or you go in with family, and you go from a place of, what can I do to add value to you? How can I elevate your life? How can I try and create an opportunity for you? Let me connect you with somebody. I've read a book, and let me tell you what the book said. And this is what being a hero looks like, which is another quick way to elevate up. We have many more books to share with you if you want, but these are 3 key ones that I thought would be important to mention. Let me just answer a couple of questions here. Advice for studying economics. I think, Hassan, that actually depends on what you're looking for. Are you wanting to have a career in economics? There's always a front stage and backstage when you go into economics. Do you want to be analytical and research and try to understand and get into the why of has the economics and everything evolved to where it is today, and bring in politics and looking at the macros and the micro side of things? Or is it that you want to be front facing and you want to be a speaker to people about economics? So I think trying to understand that as well will help. I always ask yourself the reason why. Okay, and let's go and get deep into economics. And did that say the macro? Yeah, so I think if it's just a case of learning is to look at different things. Obviously you might go and get a bachelor degree, you might have a master's, but start having a look at Ray Dalio, having a look at Warren Buffett, have a look at people that have been in the industry for 50 years, 60 years, that understand it, not just someone which has read a book and stands there and coaches from a point of theory. Try and bring the practical side of things in as well. Go and speak to economists, go and speak to research people, go and speak to bankers, attend courses, listen to podcasts. So try and look at it from a 3-dimensional way.
Sorry, I'm just going to give my take on the economics, as yes. I do have a bachelor in economics. To answer your question, actually, it really, as just Jane said, it depends on what you want to do. But you need to keep in mind that economics, if you get into economics, it's a never-ending learning journey. It's not like engineering, where you have to get set skills that you will keep on performing or practicing for 15, 16 years and just adding few things on and off. Economics is you following with the trends, what's going on in the market, what's going on in the world, not only from a financial perspective, from a macro, micro, from a political perspective, from every single perspective technically, because anything that happens within any society does affect the economy. So if you are willing to take that route, you have to be very aware that whatever you are going to get from university, from a typical conventional education academically, is not enough for you to be pushed to become the economist you think you're going to become. So there is a 40% that the university will provide, yes, which is the hard skills, as in how to calculate things, maybe the quantitative and qualitative side of things. But then there is that 60% that is just you, your passion, what you're reading, what you're looking at, what you're looking for. So that is something to keep in mind. And I wish someone told me this when I first joined the economics bachelor program. So yeah.
Yeah, that's a good point. That's a good point. And yeah, Iman is the best person to ask on that, having been through it. And that's her passion. She's passionate about, and this is one of the things that we've been talking recently when she's come on board, and I was asking her, do you want to be front stage or backstage? Because she has that analytical part of her that she's passionate about, and she wants to go into the details, but also she enjoys speaking to people and being what we call front stage. So she's always said, I want to do both. You know, I want to wear both hats, which you can do, of course. If I could, because you've asked some people have asked some really good questions here. So Mohammed, you said, what's your advice to people who's going to have an 18-year-old to be a good explorer? And if they're studying, what are they studying? So if they're 18 and let's say if you're the father, Mohammed, and you have an 18-year-old son, for example, I'm not sure if you have an 18-year-old son or you are an 18-year-old yourself.
I believe he means that he's an 18-year-old himself.
Okay.
It's either that or, yeah, but mostly that.
So there's two main things that you can be thinking about or doing. One of them is, as we've talked about, make sure you have some cash and you built up some cash as a rainy day pot. Obviously, 18, you may not be working at this point, but maybe you've had some pocket money, but store some money away. And if you are receiving maybe pocket money or you have a job at the evening or weekend, try and think about consistency and building up your habits. So that's one thing. The second thing is to be listening, reading, educating yourself, getting yourself ready to invest. So whether or not you're thinking about the markets, you're thinking about a business, whether or not you're thinking about property, try and read books, podcasts, and we'll share some podcasts in a moment with you on how to develop. At 18, or I even think for most of us, even I'm 39, so even for a lot of us at my age, we live in this kind of microwave society where we want everything immediate and right now, and that's dangerous for building and developing your wealth. We have to. It's all about consistency and development. It's far more important to get the strategy right of how to invest than it is about what to invest in. A lot of people get so fixated on the investment, and it's so much more about the strategy that you have. So sitting down, getting a little book with some paper, blank paper, and thinking about your vision and your goals, what's important to you, developing yourself as an individual is a far better use of your time, I would believe, than sitting there and saying, okay, well, if I go into this stock because it's dropped, 30%, or this has a PE ratio of this, I can make some money quickly. You're better off working on your habits and yourself as an individual, and that will set you up from the age of 18. It will give you a great foundation to build upon. Faikel, you mentioned about safe return on investment and an easy approach. Yeah, so this is our stage one investment, which is a very, very safe, habitual type of investment. It's not high risk, it's very, very low risk type of investment, and is about building that foundation. So yes, it's a safe return on investment, but it's as I mentioned, it's less about the returns, it's more about building them habits. This is a really good question from Rowan. If I'm starting a business, is it better to start individually or with a group of people? So there's no right or wrong answer to this, but what I would say is that if you start off on your own and you have a service or product or something that you're passionate about, and you spend time thinking about it, you spend time doodling and playing the what if game, and 2 years from today and 4 years from today and 10 years from today, what would I like this business to be like? What would my ideal customer be like? What would my brand look like? What would people say about me and my service or my product? If you start to think about that, and then once you've developed it a little bit, and I'm not talking about spending any money, but you might sit on it and think about it for a month or 2 months. If you then start to go out and tell people and share with them your vision, your goal, people will all of a sudden the right people will become attracted to you. Because, for example, if you sit down with one of your friends and say, I'm thinking about developing my own beauty product. I'm really passionate about developing a product for sensitive skin types. I have this ingredient that I've been aware of, and I want to develop something which is low cost and helps the world and helps people with sensitive skin. If you tell enough people about what you're wanting to do, your friends will say, oh, you should speak to such and such, and you should speak to my cousin because he wants to get into this. And if you start out doing this, before you know it, you'll sit down with 2 people, then 2 people will become 4 people. And it might be that but you'll learn and develop along the way, because you'll sit down and you'll share, and other people will say, look, I've tried that, but maybe you should have thought about this. And you'll navigate, and you might still end up doing it on your own, but by going through this journey, you'll learn and develop a lot more, and you'll understand more about yourself and what's important and why you're doing it and why you're passionate about it. So I would say, start out yourself for the first couple of months, no need to invest money, but then go out and share it with people and see what attractiveness you get from the people around you. I hope that helps. If we can, but growing, what would the time frame be to grow 1 million? This again, you could do it in 3-4 years, or it could take a lifetime. It depends. You know how I talked about the hunger, the engine, the 40%, depends on how much you want it. But you can get there. I've seen clients of mine get there in 3-4 years. And I've seen people that I've been working with for 15 years, which still aren't quite there yet. So it really depends on the individual, but it can be 3 years. It could take 20 years. Are the opportunities for university students to start working on themselves and step up their game, and not only depend on the bachelor's? Yeah, absolutely. And the best way to do it is to get out there and try. The quickest way that you're going to learn is by failing. University courses, any courses, any books, they will never teach you how to fail. Books only teach you how to succeed. They'll teach you how to take the right steps. But the biggest way of developing is to fail, to have the door slammed in your face, to have a product that was declined, to have a customer that say, I don't want this, and you will learn and develop. So, you know, I'm part of courses and networks with people in the US where they've got kids from the age of 10, which they're trying to encourage them in schools to go out and sell a product, to learn how to market it and develop it. So you don't need to do a bachelor's. It can be something that you do online. It can be something that look at Warren Buffett, or a lot of people that have developed, you know, they were selling things in school, and I'm definitely not trying to advocate that, because it's something that may not be allowed, but you don't need to have a degree. You don't need to have, you know, permission. If you're doing something that is good and you're helping and something that you're passionate about, just start. You know, the best time they say the best time to plant a tree was 20 years ago. The second best time to plant a tree is today. So don't procrastinate, don't wait. You know, a lot of people want to wait for something to be perfect. Perfect doesn't happen. You know, for me, perfection is 70 to 80% right. The best thing to do is just start, and you will learn and develop at a quicker rate.
I just have an addition to, I'm not sure if the same
Sure.
question or the same person. Someone is saying, but in our country, they need the degree. From an academic or someone who's obsessed with academics, okay, I'm just going to give you an advice for anyone who's looking to ask this question to begin with. Okay, so yes, the degree, the academics could give you a push, but it's not your ending road. Sometimes you would be admitted. I know where you're coming from with this question. So sometimes would be admitted into a company or into an industry just because of the skills you have, and not really the degree. Yes, the degree is important, to some extent. But say if I did have the degree in finance, but when I had the interview with James and he asked me a random question that regards the financial analytics, and I did not know how to answer that, how does that benefit him or me? You see what I mean? It's all about the skills that you hold. So those could be coming from your academics, those could be coming from the skills that you learn as a self-taught things yourself. So in this era where everything is accessible through Google, YouTube, the internet is such a gold mine. You just know how to, you should only know how to research things in order to get access to them. So a degree could give you the first push, but when you are looking to upgrade into your own industry, I don't think anyone from 10 years in 10 years from today is going to ask you, oh, give me your bachelor degree. They're all looking for skills. And I think James, being a entrepreneur and a CEO of multiple companies, I would say, could agree with this. Is that correct, James?
Yeah, absolutely. It's important to have, I mean, it depends on what you're wanting to do. Obviously, if you want to be a lawyer or a doctor, of course you have to have the university degree, the certificates, the education behind you. But if you're thinking just about setting up a business, you know, Alan Sugar, Richard Branson, you know, Elon Musk, some of these people, they didn't even have degrees. They started out early, and then maybe they did a master's or something down the line to add to it. But if for example, if you're going to go in and sell a healthcare product, then maybe you might need to have some form of master's or bachelor's. But if you're wanting to set up a coffee shop, for example, or a florist or hair salon, then, or you're wanting to provide something which isn't regulated, then you wouldn't need to have a degree or any level of education. Khaled, hi Khaled, hope you're well. He's asked a really good question. So your thoughts on risk, does that increase as one moves up through the levels, or is it less of an issue once the wealth increases? And does hunger equate to risk taking? So two really good questions, and I'm glad you're enjoying the webinar. So risk doesn't need to increase. It doesn't mean that as you build your wealth, risk increases. Actually, some of the clients that I have with the largest amount of wealth are the least risk takers. They are the most conservative. So it doesn't mean that to build your wealth, you have to become more risky and take on more risk. Not at all. And does hunger equate to risk taking? No. Hunger is your inner why. It's what is the reason why you want to have $1 million, or you want to have a property portfolio, or you want to set up a charity in Africa or in the UK, or you want to give back and you want to help people. The stronger your why, the stronger your hunger, and the more that you, I would say, squeeze it, the more power you're going to have behind it, and the more you can accelerate and develop. So it's not about risk. It's not related to risk. It's more, what is your reason for wanting to do something? I hope that answers that. What kind of habits that may increase my skills and finance? Well, firstly, a habit of saving, a habit of monitoring debt, a habit of investing. I mean, it depends on where you want to be. If you just want to be financially successful, but there's, I think the habit comes down to repetitiveness and then monitoring your habits. It's always important to look back and say, well, how successful is this habit? Because if it's not successful, we need to tweak it. So it's evaluating the habits that you have as well to make sure that they are achieving what you want to achieve. So yeah, that's it's quite basic in terms of the habits, but it's making sure that they are doing what you want to achieve. Habits of reading books, habits of going on to podcasts and listening to different podcasts, and spending time with people which are already financially successful, asking really good questions to people which around you have reached financial success. What were your habits? How did you learn and develop? What was the key ingredient for your success? What were the failures and how did you overcome it? You will all know people around you which are financially successful. Tap into their experience and their wisdom of how they have developed and learned. Aisha, doctor, if you are not the CEO, what would you be? Is she meaning?
She talks to you.
So if I wasn't a CEO, what would I be?
Yes, this is a question.
I mean, the title CEO, I think is pushed around by people. I mean, a title doesn't really mean much. You should always try and provide more value than your title. If you don't, then the title is short-lived. So yeah, I wouldn't get hung up on titles. A title just comes because of the position that you're in, but also you need to be trying to create more value than your title. Give more than you receive. E-commerce is a good way to grow your net worth, or at least to build capital. Help you creating a business. Yeah, e-commerce is it's an extremely competitive market. It's a way that you can grow, but you need to understand your product. You need to understand your target audience. You need to market it right. There's a lot of flows that you need to go through, but it's far easier than, for example, go and take a rent of a shop or a building. And you have immediate outlay. If you have an e-commerce and you can develop a website for $1,000 or something or less, you can get up and running very, very quickly. So you're right in that regard, Mohammed. Yes. Is the habit of saving considered a way to gain money? If yes, how can we take advantage of savings? So savings is the first part, which I would call the cash confidence, where you try to develop the first part of it. That then, because savings is not invested, savings is your rainy day pot. Once you've reached that safety net, let's say 2, 3, 4, 5, 6 months worth of your salary, whatever makes you feel comfortable, everything after that should then become investing. So there's a difference between the two. Is there a right mindset? How to maintain a good one? That's a really good question, Ahood. The right mindset, I think, is coming from a place of wanting to help, wanting to have a bigger and better future for yourself and the people around you. And the way to maintain it is to understand that you are an evolving human being, that just because you may have reached success, or you may have become a CEO, or you may have reached a title or a position that you are comfortable with, there is always more and bigger, better opportunities beyond that. And it's so much more rewarding to help and give other people than it is to just receive yourself. There's a lot of people say, being wealthy doesn't make you happiness. It doesn't make you happy. The people that say that haven't helped enough people with the money that they have. If you're able to help other people, whether or not it's through charity or supporting or giving other people, the feelings that you get when you do that is far more than you physically buying and having something material. So by you reaching financial success and using that for bigger things to help other people can internally make you very grateful and satisfied, far beyond personal purchases and material things. So I do think if you're constantly thinking about a bigger, better version of yourself, then there is no, maintenance, if you like. You're constantly evolving. Good question, Shaker. What kind of goals should I set? Is saving money can be one of the goals? Yeah, if you're in a position where you don't have any savings, then getting to a point maybe in 3 months or 6 months or 12 months to a point where you have savings is an achievement. And you should celebrate every achievement. So it's never about, never compare yourself. This is not a sprint. This is about you learning and developing. It's a long process. But if you can keep taking small steps and building continuously with time, then you will reach wherever you need to reach. So saving money absolutely can be one of the goals. I think you've answered that one, Aman, about going back to the recommended books.
Yes. We have a good one, actually. Someone is asking, can you please clarify what Pryndon offers to people who have a capital of $500,000?
Okay. So first of all, what we would do is we'd sit down and understand what's important to you, Sarah. We're not here to sell products. We're not here to say buy what we are. We sit down and take our time to understand your journey. How you would have developed the 500,000, how that income has come in. Do you have your own business? Are you wanting to go into your own business? Do you have cash confidence? Do you have a family? Are you wanting to buy property? Are you wanting to retire early? So we would spend time trying to go through a fact-finding process to understand you and what is important to you, and what's your path. And 3 years from today, what does success look like to you? And then we're in a position to be able to advise appropriately. It's not about us saying, okay, give us the money and we'll just invest it, because that then becomes about us and not about you. So remember, our goal is our only goal, and our main purpose is always to help clients achieve their goal. And if that happens, we've reached success. So hopefully that answers that question. Digital currency, can never have a webinar or seminar without someone asking about maybe cryptos or digital currency. So it's already part of digital currency. Ignore the phrase crypto. We already have it. We have debit cards, we have PayPal, we have tap on Apple Pay. So we already have digital currency. It's already been part of our life for 10 years, 15 years. That's nothing that's new. But decentralized, sorry, I could go on to a very technical topic here, but decentralized currencies and decentralized finance and blockchain is a very, very different element of finance that we have now. And it is going to be part of our future, but none of us really know what that's going to look like, because it's a different structure that's non-regulated, and there's fear there is a lot of complexity and unknown. So it will take time. Cryptocurrency and blockchain will definitely be part of the future, but what that looks like, a perfect example is look at the companies which were to the front of the race with the mobile phones. You had Nokia, you have Motorola, and now they're nowhere to be seen. They were the pure leaders, and then BlackBerry came in, and now it's Apple, Samsung, Huawei. So yeah, I wouldn't get too caught up. It's in its infancy. I wouldn't get caught up in which one it's going to be, but for sure it's going to be part of our future. How to deal with the fear from starting in this journey? Well, that's another great question, Ahood. Fear is normal. Fear is part of our life. I wouldn't fear. It's a double negative, but whenever we walk out of our doors in the morning, none of us know what the day is going to hold. We don't know if we're going to get hit by a bus. We don't know if we're going to lose a job. We don't know what is out there, but that's also what's exciting. But the ones which use that uncertainty, I think I'd use the word uncertainty rather than fear, because 90% of what we fear actually doesn't happen anyway. So it's just in our mind that something is going to happen. Uncertainty is real. Fear is a perception of something that we are visualizing, a negative visualization. So I would think about fear as an uncertainty, but uncertainty can also be exciting. You know, you can make the most out of it. I didn't know how many people would turn up on this webinar this evening. I didn't know, that I could create an impact and have a positive approach towards people. There's a lot of things that we don't know, but if you commit to it and you go into something with the best of intentions, and you accept that if it doesn't turn out the way that you want, there is a learning to be taken from it, and that you will get back up, even if you're knocked down, and you will get back up and try again, then it can only be a positive journey. So that would be my take on that. Is starting to invest a fixed amount of money monthly in the stock market a good idea? That's another really good question, and it really depends, Bader, on your habits. If you are somebody which has a lot of discipline, then yes, that can be a good starting point. If you are somebody that struggles with discipline, you might need to do something which is automatic, because generally investing into the stock market is what we would call stage 2 investing, where you need to manually do it yourself. That's fine when you already have developed the good habits. But if you are struggling with discipline, I would say start with stage 1 to start to build up and develop them good habits before you go into stage 2. Mohammed, about cryptocurrencies, the money for the future, we touched on that briefly. Amina, can you please give us some advice about investing, making sure that investment is rewarded, and can you recommend books where you can learn about investing? So The Psychology of Money is good, a great book. Someone mentioned earlier about Rich Dad, Poor Dad, fantastic book, Robert Kowalski. He has 2 books, very good if you want to go into property and real estate. But if you want to go into mindset and development and markets, it's not the best book. But the question here about making sure that the investment is rewarded, if you're picking, remember what I mentioned earlier, that it's more about the strategy than about the investment. So if you pick the right strategy and you're working with an advisor, whether or not it's a man, it's myself, it's another firm, but if you are working on the strategy and you're picking a balanced to low risk investment, it will reward itself. You can't go wrong because you're focusing on the right things. If you try to pick the next get rich quick scheme and pick the next GameStop or the next stock which is going to grow 1,000% in 2 days, then you are in an extremely risky environment, and the chance of success of that is 0 to 1%. So if you focus on the strategy and you have a low to medium risk investment portfolio, then you can't fail. So do you think nowadays investing in real estate is not the ideal way to have spontaneous business growth? There's a few answers to that. I think it depends. Remember, real estate is when you have 250k to $1 million. So you've already put the foundations in place. You've already got a safety net. You're already diversifying. So then going into real estate is naturally the next best thing. Real estate can be great, but it's the most illiquid asset. You can't sell it tomorrow and get cash. So you need to make sure that you do have liquid investments in cash to back it up. The worst thing that you can do is go into real estate when you only have a small amount of money in the bank and you go and put everything into that project. That's a very dangerous thing, especially when you look at now interest rates are going up you know, 2, 3, 4 times. If you have to sell or fire sell the property, you can put yourself in a very difficult position. So I would follow. This is why I put the steps in place. I wouldn't go into real estate until you kind of gone through them stages and you reached, you know, rising star, you're at 250k and above. What goal should I set if I'm a medical student working and saving is not an option? I would look at how to try and find a second job, maybe something at the weekend or evening, if you can, even if it's, you know, $100 a month. Try and get an income. The quicker that you get into money coming in and money going out and managing that cycle, the better. But if you're not able to, try and read books on like the psychology of money. Try and listen to podcasts on how to start out. Get yourself ready so that when you are working and earning, that you already have a mindset and a skill set. Go and speak to people that are maybe 22, that are 1 year into the medical industry, that have been earning a salary, and try and speak to people which are financially successful and ones which have failed financially, and try to understand what is the difference between the two, so that when you do get your first paycheck, you can start positively instead of trying to find your way. And go advice. You advise us to invest some money in cryptocurrencies now the market is down. Do you advise? Yes, but only if you have followed the levels. I wouldn't go in if investing is your first thing. I wouldn't go into cryptocurrencies until you've followed some of the other stages. You also have to protect your emotions. Investing is a very emotional activity, and until you know, if you want to learn to swim, you don't jump in the deep end immediately. You start off and you go down the steps, you get into the shallow end, you get comfortable, and when you build your confidence, you start to go deeper and deeper and deeper, and you might get to a point where you go too deep and you need to come back to the shallow end again to regain your confidence. But you wouldn't just jump in the deep end and say, okay, I just need to find a way to swim, because you might never get back into that pool ever again. If you have, you know, near drowning experience, you might have a fear for water and say, I'm never getting in the pool again because of this experience, and it could haunt you for the rest of, you know, of your life. So just be really careful. You have to protect your confidence and do things slowly. Agree with the property part. You talked about how do I go about full-time employee with middle range salary? Shall I start saving or maybe invest a small business, then start saving? No. So start saving first. It's so much more. If you already have a middle range salary, it then becomes about your outgoings than your income, because I've met clients which have huge salaries that can't save anything at all. And I meet clients that have a quarter of that salary, of the one with a large salary, and they save, you know, a significant amount of money, 70% of their income. So it's always about, you know, how much is your expenses rather than your salary. So find a way to reduce that income and start to build the habits. Don't jump into a business. You know, unfortunately, 70% of businesses fail. You know, it's only once you get to your second, third, fourth business, statistically, that you will reach success. So if you've not started saving anything yet, jumping into a business to try and make money is going to really set you back. So go through the steps that we've put in this webinar, and follow them and build. It doesn't matter if it takes 2 years, 5 years, that period will come, but you've built it on good foundations. Is college still worth the time and the money, the hard work and the money? This is a difficult one, because Iman comes from a very theoretical, analytical, and she's very smart. I even though I have a law and a finance background, I struggled through school. I have dyslexia, and I really struggled with retaining information. So I had to work around and focus on my skill set and avoid my weaknesses. So if you are somebody which you retain information, you're analytical, you like and you develop quickly from reading, then I would say explore it. If you find it difficult, like I did, and it is hard work and it's challenging and you struggle to retain information, then maybe the education path, like for me, isn't your path. It isn't the way that you should explore. Maybe you should be looking at, okay, I'll go and listen to podcasts. I'll go and listen to Audible, which is where I read or retain most of my information. I can't sit down and read a book. I need to listen to Audible to retain it. And then you might realize that you're more of a people person than an analytical person. So if you are, I'm guessing, Daya, from the question that maybe you're finding college difficult and hard work. If you want to become a doctor and you want to become a lawyer, then and that's something that you're passionate about, then yes, you're going to need to go through it. But there are many ways to get to where you want to get to. It was 1978, I think it was, when the top 50 companies in the US made it mandatory that you had to have a business degree. Before that, it was optional, and then they started to realize that as universities became more popular and there was business degrees, there was finance degrees, there was masters, people started to realize that actually coming through that education system means that we can employ better staff, that we can grow our business in a quicker way. Then what happened is, I think it was 7-8 years ago, the top 20, 30 companies in the S&P 500 turned around and said, it's no longer mandatory. We are not going to take people on with degrees. We're not going to discriminate people that do not have degrees. If you have a capability, you've got a skill set, you are an extraordinary individual, we will take you on them merits alone. And if you have a degree, okay, great, that might be a bonus. But if you don't, please apply, because we're going to employ you based on your extraordinary skill. And I think that's something worth mentioning there. Yeah, okay. I could talk about all this all day, as you could probably see, but thank you all of you for, I'm not sure how long this has been, an hour and a half. Thank you everybody for today. Please send us an email to info@prunden.com and you will receive your free copy of Where Does Your Money Go? We can start to help you, and we'll reply to you with some advice once you have completed that form. And then if we are able to take it further and help you further, we can explore it more. But everything at this stage is free of charge. You don't need to worry about paying for things. We come from a place of wanting to help, educate. We want you to achieve and realize your personal goals. So thank you all for your time. Thank you, Iman, as always. Thank you, Mary. Have a great evening, and we're always here. We try to put things on Instagram, on LinkedIn. Iman's going to be posting some more things, and anything that you need, please reach out and we'll do everything we can to support you, to guide you, to mentor you. And I wish you all the best.
Thank you, James, for this amazing presentation. So guys, for the remaining of your questions, you can send us a DM, so a direct message on Instagram, and I will be taking care of answering all your academic related questions if you have any. And for investing questions, or if you are willing to benefit from any of our services, you can email us via info@prunden.com. So it's the email shown in the screen. And thank you for taking the time to assist during these is it an hour and a half? Yeah. During that hour and a
Yeah.
half, I hope you enjoyed it. I hope it was informative and educational for you. And we are looking to have you again soon in our next webinar. And of course, I will keep you updated. So follow us on our Instagram for all coming updates of any events, seminars, or webinars. I think it is already in the chat. So I will just attach it again. So this is our Instagram. And if you have any questions in regards to anything that we have not answered yet, you can get back to us on message.
Thank you, Iman. Thank you, everyone. Have a great evening and all the best. Take care.
Thank you. Bye-bye.